dad got lung cancer. I was young. I saw my hero get sick, taken away from me. And you take a trade and you lose money. Every time you lose money, you think about all the things you could have paid with that money that you lost. Like if you ask a random person about Forex trading, they won't know what it is. PUP is percentage in profits, so it's a unit of measurement. A lot size. This is a controversial way of explaining it, but think of it this way. You also have the experience of knowing what it feels like to lose the first source of income. It all happened by mistake. I didn't plan on becoming a Forex trader. Everyone goes to school, they study. Everybody goes to school, they study. They don't know what they want to do in life. You have parents try to push you along the right path. Yeah, I don't know if people can relate to this, but when you get to like grade 10, there was always pressure like, what subjects are you going to choose? Everybody was like S7. S7 was physics, biology, I think accounting, and pure maths. So that was like the go-to course or modules to choose from for your matric years, because you study S7, you get into like engineering, accounting, some academic profession. And I was never like that. In school, I started off with, I think, computers, business studies, and accounting, and pure maths. And then in grade 11, I remember I dropped out of computers and I studied art. So I did pure maths, business studies, accounting, art. That was grade 11. Then grade 12, which was my matric year, I dropped out maths. I went to maths literacy, business studies, accounting, art. So I honestly didn't know what I wanted to do in life. I was always changing my subjects, trying to learn different things, trying to find my path, And then after school, I studied business, BCom marketing at Varsity College, Durban North. I always wanted to get into business. My parents or my family was big into business. I was never brought up with the mindset of having a 9-to-5 job. So obviously, naturally, after I completed my matric, did my studies, a lot of people don't know this, but during my time when I was studying, my dad got ill. So my dad got lung cancer. So in fact, first he got stomach cancer. He got stomach cancer, and that was a big hit to the family. But he got surgery and he obviously went into remission. However, cancer can always come back. And then 3 years later, he developed terminal lung cancer. So during these times in my life, especially when my father got cancer the first time around, I knew that I needed to be close to him. I tried to learn as much as possible from him. I tried to spend a lot of time with him. Tried to learn how he does business, how he conducts himself, how he builds his relationships. It was a scary time for me because it was just me and my dad. My mother, my sister, but I mean like the men in the family, it was just me and my dad. So I was young. I saw my hero get sick, taken away from me at a young age. So all of these things affected me because at the end of the day, he was my mentor in life, in business, in anything I do. So, that affected me a lot. I got into business at a young age. I made a lot of mistakes because my dad wasn't there to help me, to mentor me. I had to learn a lot of things on my own. So obviously I didn't know what I wanted to do. Because I didn't know about it. It was something that I just stumbled upon. Forex trading is big on social media. Like if you ask a random person about Forex trading, they won't know what it is unless they saw something on social media. They saw some Forex trader driving a fancy car, or they saw some Forex influencer, posting big profits and something like that there. So that is why, when you ask me the question, uh, why do I think Forex trading was a mistake, is because I didn't have social media. I was not exposed to that type of content. So another person showed me that they were trading, so I stumbled upon it by mistake, and that is what intrigued me and got me into it. And I didn't know that I'm going to end up in this situation where I'm going to become a mentor or Forex influencer or Forex trader, and this will be my only source of income. So life changes, things happen, things move from wants to become needs, and the ability of a man is to provide. So I needed to provide. I made Forex trading work for me, and here we are. Okay, so the reason why it's stressful to trade for a living is because it's not guaranteed. Like a 9 to 5 job, you put in the work Monday to Friday, you get a wage, or you work from the beginning of the month to end of the month, you get a salary. Forex trading is not the same. You have to put down capital, you have to use your skill set, you have to use discipline, you have to trade, make profit. In the process of making profit, you're also losing capital, you're also losing profit. But the end goal is where you become an overall profitable trader. And some months are good months, some months are bad months, some months are break-even months. Now the problem is going through that process. It's not the same as having a job where you're getting a set stable income all the time. Here now, it's up and down, up and down. But the beauty of it is, if you apply yourself, you can make a lot, way more than a 9 to 5 job, and way faster. It's all, it comes down to your skill set, it comes down to you, it comes down to you as an individual, your education, and how much time and effort you're going to put into your Forex journey and your Forex portfolio and your Forex business. So I won't recommend somebody to quitting their 9 to 5 job to do full-time Forex trading, because I did both. I had a business or a source of income, and I was doing Forex trading on the side. So I know what it feels like to have one source of income and then use Forex trading as an investment tool as a second source of income. And then I also have the experience of knowing what it feels like to lose the first source of income and rely solely on Forex trading as a source of income. And the psychology of it is completely different. Like when you have a 9 to 5 job, for example, or a stable income, and you're dabbling into Forex, it's much more easier to become profitable because you have something to fund your account with all the time. So the fear is not there of losing capital. However, when you are taking on Forex trading as a full-time job or full-time career path, it's more stressful because you're trading for a living. Remember something, when you're trading for a living and this is your only source of income, when you lose money, you think about all the things that you could have paid with that money. For example, if you're living alone and you have rent to pay, groceries to buy, car installments, whatever it is, medical aid, things like that, and you take a trade and you lose money. Every time you lose money, you think about all the things you could have paid with that money that you lost. So that affects you. Every time you take a trade and you're making profit, every time it goes into profit, you think about all the things that you could have paid with that profit, like your rent, your car installment, your groceries, your medical aid, school fees, whatever it is. So these things play on your mind when you enter the markets. So I would suggest, if you have a 9 to 5 job, use Forex trading as an investment tool. If you have a business, use Forex trading as an investment tool. Don't just jump straight into Forex and quit everything cold turkey and want to become a Forex trader, because the beginning of your journey is a painful journey in Forex trading, especially if you don't have the correct mentor and the correct strategy, correct trading plan. If you don't have all these things set in place and you don't understand risk management, Forex trading is dangerous. So having all the tools, all the things set in place, Forex trading is a good opportunity. So use it as an investment tool. Don't just quit your stable income and get into Forex trading. Be responsible about it. Use it as an investment tool. If it gets to a point where now you're making more than enough money from Forex trading, you've been through your journey, you are completely profitable, you have enough capital set aside, then yes, you can leave your 9 to 5 job and become a full-time Forex trader and have complete freedom of time, because that is the end goal. The end goal is having high quality of life, completely being not independent on anyone for a source of income, meaning no man, you don't need to rely on any man to feed you, you feed yourself. So that is the main goal of becoming a fully sustainable Forex trader. But that comes later on in your Forex journey, not in the beginning where you just want to quit your job and start Forex trading. That is a big mistake that social media plays on everybody. They keep telling people to quit their 9 to 5 jobs and just become a Forex trader. You can't do that. You need to be responsible. So it is a way of, Forex trading is a way of escaping the matrix, escaping the rat race, jumping ahead in life. So it is something that you should pursue. It's something that you should put attention on. It's something that you should put time and effort into learning. It can change your life. It changed my life. It all depends how much capital you have. Each person is different. So I feel like each person's risk tolerance is different. Each person's trading style is different. Each person's psychology is different. So when talking about how much money you should put down or risk when becoming a trader, it all depends on the type of person you are and what's your lifestyle. So if you're a person that's earning minimum wage, you can't be taking your entire wage and putting it in the Forex, because in the beginning you're going to pay school fees. So a beginner trader, if you can set aside like 1,000 Rand or 2,000 Rand to begin trading with, it's something that you can definitely grow. It's something that you can definitely make a source of income with. It's not going to change your life, but it will change something in you and show you that this Forex trading thing is real. So if you're a beginner trader and your lifestyle is a bit on the lower end, start small. If you are a big businessman, treat it as an investment tool. So if you're going to take 100,000 Rand or 1,000,000 Rand and put it into a bank account, and how much return on investment it's going to give you over a 1 year period, all of those things, if you can use it as an investment tool, then you need to treat it the same when you fund your account. So if you're a businessman and you're funding your Forex trading account, apply risk management, trade to make specific percentage gains. It's all about risk management. It's all about financial discipline. It's all about trading plan strategy. So my advice is, beginner traders fund with 1,000 Rand, advanced traders fund with larger amounts, but apply risk management and chase percentage gains. Don't change just Rand value. So I don't know if you know this, but in the Forex markets, there's a few terminologies that you need to know about. Things like SL means stop loss, TP means take profit, PE means break even, meaning move your stop loss at entry or into profits. What other terms there are? There's trend lines, Fibonacci, market structure, order blocks, fair value gaps. There's a lot of terminologies that you need to learn in the Forex game. Lot size, there's lot sizes, there's certain tools and apps that you also need to educate yourself about. For example, TradingView. TradingView is a nice app to use. It's free, that we use to analyze the markets. It's very user friendly, practical. It has a lot of tools there. Another app to use is MetaTrader. MetaTrader is a good app that we use to execute our trades. There's also tools in there. You can trade on broker platforms. So all these things you need to learn how to use. TradingView, MetaTrader, the broker platforms. Another nice thing to do is a thing called FX Replay. FX Replay is a form of a backtesting tool. So a lot of people that actually starting out in Forex make the investment, invest into something called FX Replay. It allows you to trade a live simulated market, meaning you can go back in time and then it'll play a live simulated market and you can practice that way. So instead of you just back testing on a dead market, you back testing on a live market. So it's allowing you to have or put in the hours and experience on a live chart. So the more hours and experience you have on a live chart, the better of a forex trader you're gonna become, because you're gonna hone your skills and become a good trader. So it's all about the amount of time and experience you have on the charts, because with the experience comes intuition and things that you can see that will only come from experience. So FX replay is an important role in improving your skill set as a forex trader and finding profitability faster. So the market moves, you get trending markets. So you get markets that trend either upwards or they either trend downwards. Then you have ranging markets where markets just bounce up and down, up and down, up and down. So they consolidate. And then you also have high volatility situations. So you have like your sessions, for example, London session, Tokyo session, New York session. That's when there's high volatility in the market. And then you also have a thing called news. So news events come out, interest rate decisions, things like that. There, non-farm payrolls. There's also high volatility and big spikes that happen during those news events. So those are the kind of market conditions. Another big volatility moment is like when companies release earning reports. When there's war happening in the world and it affects like markets, it affects gold. So there's volatility that happens there. So you get trending markets, it trends up, trends down. You get ranging markets, so it's consolidating, just bouncing up and down. Then you have sessions where there's volatility. For example, New York Open, you'll get the volatility there. Then you have situations for news where you'll have spikes up or spikes down. So these are your opportunities to actually make money. In a trending market, there's specific strategies that you use to catch the trend. In a ranging market, there's specific tools or skills or strategies like support and resistance that you can use to profit from ranging or consolidating markets. Then there's specific strategies you can use to profit from news. There's specific strategies that you can profit. For example, like the Holy Grail strategy, where you can use it for New York session and catch those volatility or volatile moments and make opportunities from those specific market movements. So when I first started trading, I used to trade a lot. So I used to trade the whole day. You probably have this experience of the first time becoming a trader. You literally trade the entire day. You're always buying, selling. You're in drawdown, you're in profits. It actually hurts your brain sometimes. It hurts your brain to a point where you don't know what you're doing anymore. You have like brain fog. You become like a zombie from you staring at the charts for so long, or staring at your phone for so long and just trading the whole day. So as time went by and I became a more seasoned trader, I got a lot more experience. I realized that the more you trade, the more you're exposing yourself to risk. The less you trade, the less you're exposing yourself to risk. So the less you trade, the more profitable you'll be. The more you trade, the more unprofitable you will be. So me personally, I try to keep it to a minimal on trading. So I trade maybe once a day or 3 times a week. So I trade as less or the least amount as possible. I try to trade as minimal as possible, and that's where I found my profitability. So I choose a specific time or a specific setup, and I trade that specific thing once a day or a few times a week, and that is where I became more profitable than trying to trade the entire day. Because the more you trade, the more you're exposing yourself to risk, and you're going to get stuck into a bad trade, and that's going to affect your psychology, and you cannot track and hold yourself accountable the more you trade. So the less you trade, you hold yourself accountable, you track your trades, you will become profitable. You know, a lot of people think that to become a Forex trader or to do Forex trading, you need expensive laptop, expensive this, expensive that, the best tools, the best mentors, the most expensive strategy, the most expensive mentorship program. All that you don't need. You know, you just need a cell phone, internet connection. So you need a cell phone that has data, or in instances you need a cell phone and internet connection, so you can go to places that have internet connection, and you can just trade from there. You download MetaTrader on your phone, you sign up with HFM. So HFM is our recommended broker. You sign up with HFM, you download MetaTrader on your phone, and then you're good to go. You fund your account and you fund money into your HFM account, you deposit funds in there, you link it to your MetaTrader app. So your HFM app and MetaTrader app is linked. You execute your trades on MetaTrader. You analyze your trades on MetaTrader. You take profit on MetaTrader, and then you do an internal transfer from MetaTrader back to HFM to your bank account. So this is how it works. Money is in your bank account, it goes into HFM. From HFM, you do an internal transfer into MetaTrader. From MetaTrader, you trade. Once you trade, you make profit. When you make profit, you move it back to HFM. From HFM, you move it back into your bank account. So that's the process of trading, and that's how it actually works. Do not fall victim to people saying that they're going to trade for you. Do not allow people to trade for you. Learn how to trade on your own. You know, they say a good trader or profitable trader is good at managing their losses. So if you're really good at taking losses or really good at working through those losses psychologically, that is where the breakthrough happens. Because if you're okay with the losses, then you can focus on your wins. So as a beginner trader, do not fall victim to the to the, what can you say? What's the word? Anyway, do not fall victim to the idea that Forex trading is get rich quick scheme and you're going to make money instantly. Yes, it is possible, but it's not going to happen to every single person. So when you come into this industry, know that you're going to be paying school fees, know that you're going to be making mistakes, know that you're going to be taking losses, and be okay with it, because in the long run, you know that you are working on yourself in self-improvement, and you will become a profitable trader. So as a beginner trader, yes, expect losses, learn how to deal with the losses, because once you master that, nobody can stop you, and you do not need to rely on another man to feed you. You will be a fully sustainable Forex trader, you will be a profitable trader, and you really will escape the matrix and be free and not rely on any man or answer to anyone. So there is different volatilities. Okay, so this is my personal take on it. So you can trade synthetics, you can trade commodities, you can trade stocks, you can trade futures, you can trade indices, you can trade currencies, you can trade Bitcoin. So in my experience, indices are extremely volatile. So you get like the Nasdaq, German 40, US 30, S&P 500, and then you get commodities like gold, silver, things like that there. Then you get currency pairs, Euro USD, USD JPY, USD ZAR, whatever it is. Then you have crypto, like BTC USD, so you can trade Bitcoin. The least volatile would be like currencies. I feel like currencies are not as volatile as the other stuff. So I feel it's currencies at the bottom. Then maybe like Bitcoin comes just above that. Then you have gold, or maybe Nasdaq, and then gold, and then US 30. So I feel like that's the list on volatility. So US 30 is the most volatile. So if you want to become a really good trader, remember something: if you're trading this stuff and you're applying your strategy or analysis, you're doing the same amount of work. It doesn't matter what you trade, but you're doing the same amount of work. So why not do the same amount of work but trade the most volatile thing? For example, US 30. Because when you do apply yourself and you catch that trade, because of the volatility, you're going to make the most amount of profit with the same amount of work. There's no point in going now and trading Euro USD and putting all this time and effort in analyzing it and trading it, and then doing the same analysis, for example, but putting it on US 30 and then catching a trade that's twice as big or 3 times as big. So in the beginning, when you're first starting out, because you don't want the volatility to scare you, maybe trade a currency pair and then slowly work your way up to the list. Slowly work your way through the list and keep trying to trade a more volatile asset, a more volatile stock. So the more volatility there is, there's more opportunity in the market. Uh, there's faster profits, bigger profits. Um, so the end goal is to trade one of those volatile things, like US 30, Nasdaq, gold. So there's specific times that the forex market is active. For example, there's sessions that happen throughout the day. For example, Asia session. There's specific people in the world that go to work and trade that session, Asia. Remember, there's different time zones across the world. Then you got the London session. That is the second volatile session. Then you have New York session, which is the third volatile session. So you have Asia that starts in the morning. Then you got London, which is midday. And then you got New York session, which is in the afternoon. That's according to South African time. So I feel like in South Africa, we have the best trading conditions for those session openings, because Asia opens at 3 a.m., London opens at 9 a.m., New York session opens at 3:30 p.m. So a spread is a difference in price that the broker takes. So a lot of people are confused of what is a spread. So think about it like this, yeah. If you traveled overseas or you travel out of the country, and if you get to a point where you need to exchange currencies, physically exchange currencies, you'll notice that they have like these stalls or these stands where the people are exchanging currencies, and they have a difference in price or a spread. So if you give them X amount of dollars, they'll give you X amount of rands. Or if you give them X amount of rands, they'll give you X amount of dollars. And then the person that's dealing in that transaction, the middleman, they take a small cut. So if you give X amount of dollars, they'll give you X amount of rands, and they'll take a small cut from there. So in a broker, each broker has a spread. So every time you execute a trade, they take a small cut. So wherever you enter your trade, they'll take a small cut. Every time you close your trade, they'll take a small cut. That is a fixed spread that they get. That's how the broker makes their money. So a spread is there. It's a small gap in the price where the broker is actually making money from your execution of your trades. That is the spread. So for example, think about it like this, yeah. If you're calculating distance, so if it moved from here to here, it moved, for example, 5 centimeters. So when price moves from one price point to the next price point, you'll say it moved X amount of pips. So it's a unit of measurement. Like how you say you walked X amount of kilometers, or something moved X amount of meters, or you so many meters tall, or so many centimeters long. So for example, when it's a unit of measurement in price. So when we say you entered your trade here and the market moved here, it moved X amount of pips. So we'll say it moved 200 pips, 300 pips, 400 pips, 500 pips. And then the same way if you enter a short position, and if the price moves down, you calculate it the same way. So from your entry point, the unit of measurement from the entry point to price going down, it moved 200 pips, 300 pips, 400 pips to the downside. Or if you enter a buy trade, it moved 200 pips, 300 pips, 400 pips to the upside. So it's just a unit of measurement to show the distance in which price moved. So people get confused thinking that pips is like some major thing. No, it's just a word that's used to calculate the measurement, the movement of the market. A lot size, this is a controversial way of explaining it, but think of it this way. A lot size is like a multiplier. So remember something, a stock, for example, has one contract size. Then there's 100 0.01s for that one contract size. So a lot size is a contract. It's a multiplier. So the smaller the lot size, the lower the multiplier. The higher the lot size, the higher the multiplier. So if somebody enters a trade with a one lot, for example, we use a one lot, and we just spoke about pips. So if it moves, let's say every 100 pips, so a one lot will go 100 rand. If it moves 200 pips, it will go 200 rand. If it moves 300 pips, it will go 300 rand. However, if you use a lot size as maybe 0.50, so it's half a lot. So instead of it moving 100 rand, 200 rand, 300 rand, it will move 50 rand for 100 pips. Then 200 pips, it will move 100 rand. You know, move half the value, half the multiplier. Bigger the lot size, it will move faster. At the same time, when it goes into drawdown, it will move at the same multiplier as well. So if it goes into drawdown and you have a big lot size, it will go into bigger drawdown. If it goes into drawdown and if you have a smaller lot size, it will go into a smaller drawdown. So the lot size gives you your risk factor. That is where over leveraging comes into play. People take their account and they over leverage. When they over leverage or they go full margin, that means they use a big lot size on the funded amount. A lot of brokers have different amounts of trades that you can actually execute at any given times, or have X amount of trades open at any given time. Majority of the brokers will say 500 trades. So you can open 500 active trades on one session or one day. So you can have 500 active trades running. So holding a position in a forex market depends on whether you have a swap account or not. If you have a swap-free account, you can hold your trades for days, months, years. It won't cost you extra money to hold your trade. However, if you have a trading account, a specific trading account, you actually charge a swap fees. Every time 24 hours lapse or overnight trading lapse, you get charged a swap fee. So you can hold your trade for as long as possible, but the swap fees will affect you. So it's always advisable to trade a swap-free account. That way, if you are a swing trader, swing trading is a long-term trader that holds their trades for longer than a day. You regard as a swing trader. They would like to be trading on swap-free accounts, so they don't get charged specific fees for holding trades.